Okay, we'll get underway. Welcome to the Monday webinar with myself, Adam Howes, Senior Account Manager with Forex Capital Trading. Daily European Open on the Monday, the 7th of the 8th. Hope you had a good weekend. Short general advice warning before we begin. Forex trading involves trading risk capital. Following education session is not to be treated as personal advice. Forex CT provides general advice only that does not take into account your personal needs or circumstances. So just take a look at a quick risk events from last week. Just go to previous week. By the way, you can find all this information on dailyfx.com and searching high impact announcements on the market. We talked about the NFP last week, and we had the focal point of being the non-farm payrolls for the US. Had unemployment rate checking in at 4.3%. And we had the actual change in non-farm payroll being 209K as opposed to the forecast of 180K. So bear in mind, we said last week that the non-farm was a measure of employment data, excluding the non-profit sector and obviously the farm sector. Usually better than expected job numbers taken as bullish for the US dollar and vice versa. We did have that sort of better than expected figure. As you can see on the US dollar, if we go to the USD JPY, for instance, it's the USD CAD rather. Let's take a quick look at the USD JPY here. So if we go to an hour time frame, as expected, bang on the mark at 22.30. We saw a big spike up from the 1209 level up as far as 110.74. So a decent jump around about 70 pips, 70 or 80 pips. Yeah, interestingly, the market sort of took that into account, reached the top in the market eventually at 111.04 rather, just before tailing off and now trading at around about 110.73. Okay, so let's just have a look at the impact announcements for this week. Just taking into account what the non-farmers told us. Okay, we had a brief respite for the otherwise weak US dollar, and we've got a relatively quieter week ahead on the economic announcements. Some US focused, but we've got some other ones here, particularly around the New Zealand dollar. So quite a quiet day on Monday and Tuesday of this week. Wednesday we're coming up to the Chinese Consumer Price Index year on year. Obviously a higher than expected number. This is directly correlated to the Aussie dollar, seeing as we're such a strong export trading partner with China. We get a higher than expected number on that, then usually taken as bullish for the Aussie dollar and vice versa. Then we're coming up to the Reserve Bank of New Zealand rate decision, pretty much unchanged as forecasted, pretty much with 100% certainty. That's remained on hold for quite some time, comparatively high to most other nations as well at 1.75%. We will see some volatility on 7 o'clock on Wednesday. We see sort of rates on hold or unchanged, usually taken as bullish for the currency. Just remember that, the higher the interest rate attached to a particular currency, the higher its value. And obviously, a country, everything revolves around the Reserve Bank, and in this case, the Reserve Bank of New Zealand will be taking into account inflation data, having a look at sort of general economic conditions of whether they're sort of overheated or if they need stimulating. If they need stimulating, then it warrants further rate increases to combat inflation. Heading along to 9:30 on Friday, we've got the RBA committee meeting in Melbourne, just providing a general economic outlook on the Aussie dollar. The last interest rate decision on the first Tuesday of the month, rates being kept on hold respectively at 1.5%, indicating there's no real urgency for further rate increases at this time. Generally a bit lackluster for the otherwise sort of range-bound Aussie dollar. Then we're coming up to Consumer Price Index year on year in July, and also the Consumer Price Index for year on year July for food and energy. Now, remember that the higher these rates, the higher the higher the actual announcement as opposed to the forecasted announcement. Then again, it's a good indication that they could have some impact on interest rates. And in this example, if we saw higher than expected readings on inflation, then we'd see a further warrant for rate increases on the US dollar. So just some other things affecting the market this week. As we saw on Friday, the NFP giving the otherwise weak dollar a little bit of a resurgence. Just some fundamentals to take into account on that. We still have quite an interesting set of circumstances with political risk in the US. The Russia scandal is intensifying under the Trump investigation. Still got a lot of brick walls in relation to constitutional reform, tax reform, questions about the debt ceiling being raised, so forth and so on. So this has seen a bit of a brief, recovery for the otherwise weak US dollar, on the NFP. A lot of analysts are saying sort of that's, giving it, just a little bit of a recovery, but there's a lot of longer term data to take into account. The bearish momentum sort of still persists generally on the US dollar index. So it's quite reasonable to assume that, if we see, a failure for this kind of move to take off, then we might see more bearish pressure ensuing on the otherwise, weak US dollar. So taking into account most of the majors for this evening, relatively quiet week on data from the Eurozone, but we're seeing some good entry points, I think, on the Euro US dollar at the moment. Seen a little bit of a sort of a tail off on the NFP data here on Friday, on the Euro in particular, and seeing a little bit of a resurgence now. Now, coming into this sort of trade now, the Euro has been sort of the consistent top performer against most other majors, especially the US dollar. Many traders are going for additional targets of 119.50 an extension, as per daily technicals. Handy level of stop just below sort of the daily low, or the daily open rather, and daily open was around about 117.60. So it's a little bit tight on the stop there, but you go as far as the previous low, which is at 117.20. Similarly with our own Aussie dollar here, we're looking at broad, decrease on, if we were to see sort of a decrease or a weakness on the US dollar front, correspondingly that would translate into more Aussie dollars being more valuable against the weaker US dollar. Got a good level of support here, and an oversold stochastics area here indicating that potential further upside is possible, potentially back to the 80 mark. And then, the Aussie's been quite range bound. It did convincingly break over this territory here, but it's been sort of confined in between the 80 and the 79 level, just waiting for that breakout to occur. Likewise with gold, if we see a continued sort of bearish pressure on the US dollar against the yen, then correspondingly, in all cases, pretty much 100% certainty that would see a rise in gold, seeing these two pairs are inversely correlated. So again, sort of if there was bearish pressure ensuing after this sort of massive result on the NFP, we could see further targets when gold dropped off on Friday, seeing it sort of recover broadly to around about 1260, 1270 in extension. That's assuming that there's US dollar weakness ensuing on top of that as well. I talked a little bit about the solid range last week of the S&P ASX 200. Obviously, we've seen a very sort of tight range between 5,800 and 5,600. And a clear breakout of either of those two levels could pretty much spell a resumption of trend, broadly speaking, on the ASX 200. But until we see that, we're pretty much, sort of range bound in between these two ranges between 5,800 and 5,600 as well. So we definitely have an interesting set of circumstances coming up. The market will be focused really towards inflation at the end of the week. So bear in mind that the Fed's been, quite dovish about future rate increases. Last analyst guesstimates were around about a 40% chance of a rate rise in September. If we get higher than expected inflation, then that might give it a little bit of urgency to, stem the US dollar to the upside. But, bear in mind that, the employment data and, well, with the exclusion of last NFP, but employment data consistently, as well as GDP growth has been quite moderate. So that really sort of gives some credence to, potentially having a look at broad selling pressure continuing on the weak US dollar. So, folks, we'll keep you updated on the markets as they change, obviously through the use of SMS and other trade suggestions through the morning report. Coming up tomorrow, we'll have a bit more of an in-depth look into how the markets have moved overnight on the European market. The market is a little bit slow to open up, obviously on a Monday, and we see it in full swing by around about 6 or 7 o'clock our time. But if you have any questions about those trading setups or anything else in particular about the pairs discussed, please get in contact with myself or your respective account manager. We look forward to speaking to you shortly. Thank you very much for your time. Thank you.